Hi there. I'm taking a look here at the new Fro Options, FRO, and if you need some more information on these, you can just go right out to amex.com, which is the American Stock Exchange, amex.com, for a nice tutorial. But I'm just taking a look and see how they work for us as an investor. I'm on a trading platform here, and I'm looking at the stock Google, G-O-O-G, and I just typed up Google and then pulled up some options. So these are the options that expire here in May, and if I kind of close that off a little bit, you'd see the difference of what I'm looking at. Close this down. We're looking at May, and you see two different sections here. You see May 100s, and you see May 100s that are only worth $100 per contract. So these ones right through here are your Fro options that we're taking a look at, FROs. So let's see what happens when we click on them and see what the difference between a regular option is and the FRO options. Find those. I'm going to click on both of them. I'm going to click on the May 8th and the May 8th. These options expire in May. There's only just a couple of trading days left between now and May when this video is being recorded. And here I'm looking at Google, and the price is currently trading at $576.30. So about $576 per share, down a few points today. Now in the first options over here, which are the May options, and I'm taking a look, stock's at 576. You'd expect the 570 calls be trading right around, current price right here is about $9.10. So with the stock at 576, the 570 calls are about $9. So in other words, you're paying $9 to buy the stock at 570, so your cost basis is 579. So as long as Google goes up to 579, you'll at least break even. Anything above that's a profit. Now here's how you know the difference between the FRO options and the regular options. If I go back down now to the ones highlighted here in red, which is our FROs, we see that the 570 call options here are trading at 80 cents per share. That's it, just a simple 80 cents. Big difference between $9.30. So just understand that when you first see those and there's a big price discrepancy, don't think you're going to buy the 570 calls for 80 cents and then you're automatically going to make a sweet profit because the stock's at 9.76 and you're already $7 in the money. You're only paying 80 cents for an option. It doesn't work that way. There's a reason it's too good. If it looks too good to be true, it probably is for some reason. So what I'm going to do is I'm just going to go back now and close out the other options, which are the general options. Click on the little item and just move right with the FROs. Alright, so currently the stock is trading here at 576. Now if you were to purchase the May 570 calls, it'll cost you 80 cents. So here's how these work. As long as Google closes above $570 per share on Options Friday, these are regular options. The last trading time is after the market closes at on Friday, third Friday, and the options expiration is the Saturday at noon, 11:59 a.m. that follows the third Friday. So really options expiration is on Saturday. So if on Saturday at the expiration time in May, if this stock is trading above 570 per share, so if you go out tomorrow morning, which is Thursday, I'm not telling you the trade, I'm just looking at it, and you pay 80 cents for this option and you buy one contract for 100 shares, it's going to cost you around $80 total to buy one contract of the May 570 FRO options. So you pay 80 cents per share times one contract, 100 shares, $80. Now, as long as FRO closes above 570, so it could be 570 and a penny, 570 and a nickel, 572, 580, 590, 600. As long as it closes above 570 and a penny, you're going to make $1 per share per option. So how these work is, as long as they close in the money, the option closes in the money, you get paid $1 per share. So if this stock closes at 570 and a penny, you'll make $1 per share profit. If it closes at 570 and a nickel, you make $1 per share profit. If it closes at 590, you make $1 per share profit. The most you can make is just $1. So whatever you pay for it, 80 cents per share, you know, all you're ever going to get is $1. So you can't make any more than $1. Doesn't matter how high these go, where they take off to, you're never ever going to make more than the $1 per share. It's the maximum profit. So if you take down here, look at the 560s, there's a pretty good chance the stock's going to close above 560. So you can see the FROs already traded $1. No one's really taking that trade, so you can't make any money. So if you purchase the 560 calls for $1 and it closes above 560, you'll be able to sell the option for $1 and you'll make $0. So it's not a viable trade. If, however, you think the stock's going to go up to or stay above 570, you know you're going to make at least 20 cents per share, and which would be about 20 cents on a 80 cent investment. You're still looking at 25% on your money in the next 2 trading days as long as it stays above 570. If you think it's going to go above 580, you can pay right now about 45 cents per share. Maybe you try to get somewhere here in the middle, 45 cents per share. And as long as the stock goes to 5.80 and a penny or higher, you'll be able to sell your option back, close it out for a simple $1 per share. That's the way these work. So the most you can make is $1 per share, and you see the prices what here what it cost you. Don't confuse these with regular options. These are European style, which means that nobody can exercise them early, and the exercise date is on the last trading day. You can, however, buy them today and sell them today, and buy them tomorrow and sell them tomorrow. It's just that nobody's going to exercise them early against you, and the most you'll ever make, no matter how much they go up, is $1 per share. All right, hope that helps. Maybe it's something you want to take a look at. It's one extra way of trading. You can take a look at some spread trades with these and some other types of investments, but these are brand new, just came out in May 2008. So hopefully this helps, and go out and have a good time and play around with them. Maybe do a couple paper trades to see how they work for you in your trading style.